So as we are all aware, the long-term capital gains from listed shares and long-term capital gains from equity-oriented mutual fund units is exempt in our hands. Now, when we sell the shares, as I mentioned earlier, most brokers now give e-contracts. So even if that contract is not in electronic form, which incidentally electronic format of the contract is something which you will never be able to understand because it comes in a weird format. But many of them send the PDF version of the actual contract by way of an email. So probably we are getting the contract notes in PDF format or in the technical format. Do we save those? Do we print those? Is the question, just as that was a question in case of dividend warrants. In the bank passbook or a bank statement, how will that appear? So when your broker gives you a check for selling 100 shares of Tata Steel, and which you have inherited from your father and therefore they're clearly long term, you get whatever it is, I don't know the price, but that suppose 50,000-60,000 you have deposited in your bank account, in your bank statement. The only thing that will appear is clearing. Every bank has an innovative way of showing something without telling you what it actually is. And then you go after 4 years when your case comes up for scrutiny and the ITO asks you to prove it. When you go to the branch would have moved either, or the manager would have moved, or the staff would have moved, or the computer is not working on that day. So that is a typical problem. It happens whether it is a fancy bank or a PSB, whatever it is, So therefore, especially in cases of clearing checks, it becomes a big problem. And then, a lot of us read that deposit slip book. The only thing we write is the date, the account number, your own name, and the amount. Some people don't bother to write anything else, check number, check the bank account, nothing. Some more advanced people do write all these, but they don't write what it is for, So you have the check number and check drawn on, but you have not written for what it is, So you can't figure out whether it is a, sale of shares, whether it is a mutual fund sale or what it is, So therefore, this becomes a problem as far as long-term capital gains is concerned. So question comes, would the bank statement be adequate enough to prove that you have a long-term capital gains, that you have sold shares? Answer is clearly no. So therefore, what do you require? Obviously, the first choice would be the broker contracts for both purchase as well as sale. So many of us feel that I have sold long-term capital assets today, shares which I have held for many years. So it is exempt. Therefore, I don't really need to bother about when I bought it or for how much I bought it. This is a big mistake that a lot of people make. You have to have details of the purchase as well as sale. Okay. Otherwise, how will you prove the cost and the sale price as well as the date of purchase and the date of sale? So therefore, broker contracts is the first option. If not, the demat statement, because in the demat statement, A, the holding will be there, and B, when you sell, the credit, the debit will be there. So which shows that the money, the shares have gone out from your demat account. So that would also help to some extent, although it is not foolproof. But you need the the demat statement, because unless you had the shares in your demat, you could not have sold it. The fun part is that a lot of people give the demat account only of the period in which the sale has taken place. So the moment I get my demat account statement for the month of September, which we will all get now, I immediately promptly tear up the demat statement of August, because where do you store it? And Diwali is coming, so might as well do the cleaning before the Diwali cleaning. So that happens regularly. Invariably, it is human tendency to tear the earlier month's statement. That is again disaster, because if you have not kept the first demat account statement where you showed the purchase, then and if you don't have your broker contract for the purchase, then how are you going to prove that you had the shares for more than 12 months? And the ITO has every right to ask you, because you are claiming that it is long term, so you have to prove it, So therefore, demat statements are extremely important, and this is something that we practically are seeing most taxpayers failing in terms of maintenance of the documents.
In fact, the ITO can even say that even if you had it for more than a year, prove it that you purchased it and it's not a transfer, off-market transfer?
Absolutely, yeah, of course. He could do that. Hopefully, we are not in those days. If you don't have any proof of purchase and you don't have any demat statement, how will you prove that the shares are long term? One option is that you kept your tax returns of last several years. Hopefully in that you have disclosed your exempt income. Yeah. Hopefully in that dividend from shares of Tata Steel has been shown. Hopefully that amount matches when you check on the money control side for the history of that Tata Steel, and you find that in 2009-10 dividend was declared at the rate of say 5 rupees per share, 2010-11 at 5 rupees 50 paise per share, and that formula, when you apply it to the number of shares that you claim that you had, it matches with the dividend income that you have shown in your return. Then at least you have something to tell the ITO that, see, I have shown the dividend all these years. I had the shares, otherwise how will I get dividend? And therefore, there is a basis for saying that these are long term. Obviously, you need to show more than 12 months returns, more than 1 year back return in order to prove that you had it for more than 12 months. So this is practically something that one needs to take care of.